Good morning, all of you. हाँ, તમે મ્યુટ કરી નાખો નકર હું જ બોલતો સરાઉન્ડ સાઉન્ડ સિસ્ટમ. ઓકે ડન. In last lecture we have studied amounts received by HUF members from HUF. HUF already paid the tax, so we are not supposed to pay any tax as a member. Done. Next point, share income of partners. I think in last Thursday we have discussed this. We have back-to-back 2 sessions. Share income of a partner. What is this? Disclose exempts from a tax a partner's share in total income of the firm. In other words, the partner's share in the total income of the firm determined in accordance with the profit sharing ratio will be exempt. Now, I have given you the example, 3 students, Devansh, Krutik and Joy, I think. Yes? So, for example, partnership firm profit is 1 lakh rupee. So, out of 1 lakh rupee, it is distributed to the 3 partners in, for example, let's say 3 is to 3 is to 4. So 30%, 30%, 40%. Whatever amount received by the partners, it will be exempt. Why? Because partnership firm have already paid the tax. Your partnership firm has already paid the tax. At which rate? Partnership firm paid the tax. At which rate? 30%. Tax rate, partnership firm 30%. We have discussed this in tax rate part. 30% flat rate with even 1 rupee is earned, then 30 paisa will be payable. Yeah, Dayu? Done? Okay. So I forgot to announce that if you are in campus, then you may attend your offline session, okay? 301. 5 students are already here. So if you want to attend the offline session. Barabar? Now, this is for reading purpose. Taxability of partner share where income of firm is exempt. Okay. One circular is issued in 2014. Now, your majority of module 1 is completed. Now, the points are very short. All the rest of the points are very short and it will be discussed in separate modules, salaries, house property, PGBP, capital gain and so on. So we will discuss 2-3 points which are relevant right now and then we will switch to the next module. Module number 2, residential status. Now interest on monies standing to the credit of individual in his NRE account. NRE account means it is given already, yes. Non-resident external account. NRE account means account opened by the non-resident person. So whatever interest received on that NRE account, it will be exempt. As per section 10, subsection 4, clause 2, in the case of an individual, any income by way of interest on monies standing on his to his credit in a NRE account in any bank in India in accordance with the FEMA. FEMA means Foreign Exchange Management Act 1999, and the rules made thereunder would be exempt. Okay, it is totally exempt provided such individual is a person resident outside India. The person is outside India, resident of outside India, and is a person who has been permitted by RBI to maintain such account. the person, he or she, has taken the permission of RBI to open this account. One more account is there, NRO account, NRE account and NRO account. You can either open NRE account or NRO account. Ordinary account. In this context, it may be noted that the joint holders of NRE account do not constitute an AOP by merely having these accounts in joint names. The benefit of exemption under section 10(4)(2) will be available to such joint account holders subject to fulfillment of other conditions contained in that section by each of these individual joint account holders. Now, that is not important. Remuneration received by individuals who are not citizens of India. Now, the person who are not citizen of India, though they are receiving the money from India, government employees, okay, they are doing their duties outside India. First point, remuneration received by officials of embassy, Indian embassy. You have heard the Indian embassy in America or in Israel or in UAE, in various countries. So remuneration received by a person for services as an official of an embassy, high commission, legation, commission, constitute or trade representation of foreign state or as a member of staff of any of these officials is exempt. Okay, whatever salary received by that embassy, that will be exempt, Indian embassy. Done? We are right now learning exempt income, income which do not form part of the total income. Conditions, there are several conditions. First one, remuneration received by our corresponding government officials or members of the staff resident in such foreign countries should be exempt. Point 2, the above mentioned members of the staff should be subject to respective countries represented and should not be engaged in any other business or profession or employment in India. If any other business are simultaneously run by that person, then it will not be exempt. Okay, whole and sole one income, that is Indian government embassy or whatever the job. Remuneration received for services rendered in India as an employee of foreign enterprise. Now, vice versa, opposite, foreign enterprise but in India. Remuneration received by a foreign national. Foreign national means not resident in India. As an employee of foreign enterprise for services rendered by him during his stay in India is also exempt. It is also exempt. Conditions. The foreign enterprise is not engaged in any business or trade. Second point, the enterprise stay in India doesn't exceed 90 days during the previous year. It doesn't exceed 90 days. 90 days, not exceed 90 days. The remuneration is not liable to be deducted from the employer's income chargeable to tax. These are very small points, okay? In exams, this cannot be asked, but we have to study. The most important part in exempt income is only 3 parts. First one, agricultural income. Second one, income from HUF members. And third one, partnership firm paying the allocation of profit to partners. Okay. 1 mark question can be asked that Indian embassy earning in Canada and salary is payable by the Indian government, whether it is taxable or not. So your answer will be exempt. Okay. 1 mark question can be asked. Remuneration received by foreign government employees during their stay in India for specified training. This is the same as we have discussed earlier. Any remuneration received by employees of foreign government from the respective government during their stay in India is exempt from tax. If such remuneration is received in connection with their training in India and established an office or any undertaking owned by the government or any company wholly owned by central or any state government or jointly by central or one or more state governments. or any company which is subsidiary of point B, means wholly owned company in foreign state. Any statutory corporation. Point number 4, statutory corporation. Last one, any society registered under Societies Regulation Act 1860 or any other similar law which is wholly financed by the central government or any state government or jointly by central or one or more state governments. Now, as you know this, payment to Bhopal gas victims, this cannot be asked, okay? Neither in your university exam nor in your ICAI exam, okay? There are so many points to be asked in income tax, okay? So this cannot be asked. Do you know Bhopal gas victims, Bhopal gas scam, okay? That incident happened in Bhopal. So all the victims are supposed to pay some amount of money by the government. So whatever money received by the victims, that will be exempt, fully exempt. That is what written over here. Royalty income or fees for technical services from National Technical Research Organization will be exempt. Is all for the reading purpose only. Compensation received for any disaster, on account of any disaster. If you are victim of any disaster, you will get the money from government, you know that. So whatever money you receive from government, that will be considered as exempt income. Now, what is the meaning of disaster? We all know that disaster means catastrophe, mishap, calamity or grave occurrence in any area, substantial loss of life, okay, damage to or destruction of property, illustration is given, compensation on account of disaster. So disaster from a local authority by an individual for or his legal heirs is taxable. It is taxable? Answer is no, it is not taxable. Now, payment from Sukanya Samriddhi account. Sukanya Samriddhi account is opened by the parents of a daughter. So, generally by the parents, okay? Anyone can open. So, any payment from Sukanya Samriddhi Yojana by on maturity, okay? So, section 10, subsection 11A provides that any payment from account open in accordance with the Sukanya Samriddhi Yojana or Sukanya Accounts Rules 2014 made under the Government Savings Bank account 1873 shall not be included in total income. It is exempt. Okay, whatever amount received under this Yojana, that is Sukanya Samriddhi account. Accordingly, the interest accruing on deposits or any withdrawals from any account under this scheme would be exempt. Obviously, it should be exempt. Why? If government say whatever you withdraw, it will be taxable. Anyone will invest? No one will invest in this particular account. So to promote this type of activity, it will be exempt. Clear? Educational scholarship, whatever scholarship you receive from the government, it is exempt. Payment to MP MLAs, any payment to MPs or MLAs, that is taxable. Whatever salary or anything received by MP MLA, it is exempt. Daily allowance, constituency allowances to MPs and constituency allowances to MLAs. These three are only exempt, okay? 1, 2 and 3. Daily allowance, constituency allowances of MP, but this is very huge amount, okay? If you check the books of accounts of MPs and MLAs, it is very huge amount. Daily compensation, constituency allowances of MPs and MLAs. Now, awards for literary, scientific, artistic works and other awards by the government. If you are a writer and you receive any amount of money, token amount from government by writing a book, if you have written one book and government will give you the award, then that is also exempt. Start writing books. Yes? Yes, that is also exempt. recently Olympic won by that. Yes, silver medal. That is also exempt. So these are the points that should be one time read. Okay, scheduled tribe, Sikkim is individual. Now, Sikkim is individual means one state, Sikkim, one of the states in India. So specified income of Sikkim is individual, also exempt. Section 10, subsection 26 AAA. Now, the following income which accrues or arises to a Sikkimese individual would be exempt. First one, income from any source in state of Sikkim. If you are a citizen of Sikkim and if you earn anything, all will be tax free. But you have to be Sikkim person. To improve, to boost the economy at Sikkim. Sikkim is in northern area, if you know, last part, China border, India-China border, at LSC. So to boost there, the areas, the business, it will be excellent. Income by way of dividend or interest or on securities. However, exemption will not be available to a Sikkimese woman who on or after 1st April 2008 marries a non-Sikkimese individual. Okay? If a Sikkimese woman marries to a non-Sikkimese man, then it will not be exempt. Okay? So, from 1st April 2008, you will not be able to do this. Okay? So one illustration is given. Exemption is available to a Sikkimese individual only in respect of income from any source in state, in Sikkim. Examine the correctness, whether it is true or not. So it is not correct. It is not correct. Why? Income is available to a Sikkimese individual not only in respect of the said income but also in respect of the income by way of dividend. Okay, by way of dividend interest. It is not only restricted to the income of Sikkim area. If you receive dividend from a company which is not in Sikkim, it is out of Sikkim, and you have purchased the shares of that particular company, then also it will be exempt. Any dividend or interest. Dividend is generally exempt, okay? That we will discuss in next semester. Dividend income. Income from other sources. Now T-board subsidy. Other subsidies. Tax holidays unit established in special economic zone. These all are for reading purposes, okay? Restrictions on allowability of expenditure. Not at all important. Done. So your module number 1 is completed. What we have learned in module number 1? Basics. Tax. Why? Levy of income tax. What is the meaning of income tax? Then, whether it is direct tax or indirect tax? Direct tax. Then, which one is indirect tax? GST. Yes. Okay. Then we learn computation of total income. That is the most important part. Computation of total income. How many heads are there? 4, 5, 6. How many heads are there? Chalo. Online students, you are supposed to. Yes. Okay. Farjan, Srinath, Himant, Amruta. 5. First one is salary. Then house property. DGBP. Capital gain and other sources. Done? Don't worry. Separate modules are there for each head. Okay. Then tax rates. What is the basic exemption limit? Chalo. Basic exemption limit. 2,50,000. So up to 2,50,000, zero tax. Then 2 lakh to 5 lakh, percentage 5%. Anything available? What is that? Rebate. Yes. Section. Chalo, online students. Anyone can answer? What is this section number of rebate? That is most important section, okay? Chalo, online, offline. What is the section number of rebate? No. चलो अमृता, धीमन, फरजान, श्रीना. Ishan. What happened? Section number 87A. 87A. 12,500 maximum benefit available. Then 5 lakh to 10 lakh, 20%. And more than 10 lakh, 30%. Done? Then what is the tax rate for partnership firm? 30%. Done? Then agricultural income. Farmhouse, farm building, whatever income. For example, I have farmhouse and I have given my farmhouse on rent for shooting of one picture. Whether it is taxable or exempt. Chalo, raise your hand if you are saying it is taxable. 30. What is okay? Farjan. I am the owner of farm building. Listen, online students, okay? You are supposed to give me the reply. I am the owner of farm building. I have given my farm building on a rent to one movie producer for producing the movie. Whether it will be taxable or it will be exempt. If you are saying taxable, then raise your hand. All of you. No one is saying it is exempt. Hello, in online. Yes, Dhiman, you raised your hand. Yes, that is taxable. Anything, any activity which is related to agriculture, that is only exempt, okay? Then I am a producer of, means I am manufacturer of dairy products, whether it is taxable or exempt. Dairy products, milk, butter. Chalo, taxable. If okay, one answer is taxable and rest of you exempt. Chalo, I want reply from online students whether it is taxable or exempt. Dairy product. No one is replying online. Chalo, class. Ishan, where are you? Ishan, are you there? Okay, so dairy product income, whether it is taxable or exempt.
In terms of the behind included a politics. Yes. When you buy dairy product, it is written there.
But that is not income tax. Look, inclusive of all tax list means GST and all the other taxes. Local taxes are involved. Income tax is direct tax. That is the first line. Income tax is payable by you, not company. And it is on your income. It is not on your product. Okay. GST is on your product. It is indirect tax. This is direct tax. Chalo, the dairy product is taxable. It is not your agricultural income. Agricultural activity nahi. Look. Last point of example number 8. Dairy farming, fisheries, poultry farming, breeding of livestock. These all are taxable. Third point, this is important in agricultural part. Rent income from land used for grazing of cattle required for agricultural activity, then and then only it is exempt. Okay? Otherwise, not. If you are dealing in flowers, then also you have to, it is exempt. Income derived from sale of seeds. તમે bee વેચો છો, then also it is exempt. You are growing bamboo, then also it is exempt. Okay, these are the few examples only. List is huge, very wide. Okay, now let's begin with your next module, module number 2. Very interesting. Okay, very interesting and most important module, one of the most important module. If you don't know what is the residential status, you will not be able to start the question at start nahi થાય છે. Okay, so let me share the screen first. Yesterday તમે કોઈ નહોતા આવ્યા? Okay, due to rain. Visible? ધીમી ગતિના સમાચાર. So, residence and scope of total income, residential status. First one is individual and HUF. An individual either be resident and ordinarily resident, resident but not ordinarily resident, or he or she might be non-resident. Okay, so you have to learn these three terminology first. First of all, you have to check whether it is resident or not. If the person is resident, then you have to check the two conditions, and if it satisfies, then the person might be resident and ordinarily resident. If the conditions are not satisfied, then person will be resident but not ordinarily resident. Okay, and for rest of the entities, HUF, sorry, not HUF, partnership firm, LLP, BOI, AOP, company, there will be only two terminologies. Either it will be resident or it will be non-resident. Done? Now, let's begin with the section number 6, residential status. The incidence of tax. Incidence of tax means tax payable by any SSC. On any SSC depends upon his residential status. So, it will depend upon residential status under the Act, Income Tax Act. For all purposes of income tax, taxpayers are classified in three broad categories. That is, resident and ordinarily resident. He is resident in India and ordinarily resident in India. Then resident but not ordinarily resident. He is right now resident in India, but earlier he was not. So not ordinarily resident. Third one, non-resident. Any non-resident came to India for any purpose, any activity. So how this will be distinguished? Residential status of an SSC must be ascertained with reference to each previous year. This is the most important line. If you want to write down, please write down in your notebook. This is the most important line. The residential status of an SSC must be ascertained with reference to each previous year. What does that mean? It means, for example, I am resident in India for FY 18-19. For FY or previous year. For previous year 18-19. Then I have to pay the tax as a resident person. Now, on 31st March 2019, I went abroad. I went to, for example, America. So now, from 1st April 2019 to 31st March 2020, I will be at America only and not in India. So I will be non-resident person for previous year or another year. I am non-resident. So it is dependent upon the stay in India. It is depend on your stay in India. A person who is resident and ordinarily resident in 1 year may become non-resident or resident but not ordinarily resident in another year. That's what I told you. Okay? एक વર્ષમાં જે resident છે, in next year he might be non-resident person or he might be resident but not ordinarily resident. Or vice versa. Vice versa means reverse situation. Opposite, yes. Now, how to determine the person is considered to be a resident person? Now, residential status on the basis of number of days stay in India. How many days he was or she was in India. You have to count the number of days. Under section 6, subsection 1, an individual, this is all about individual, okay? We are right now learning for individuals only. Is said to be resident in India in any previous year if he satisfies any one, okay? Any one condition. First one, he has been in India during the previous year for total 182 days or more. How many days are there in 1 year? So out of 365 days, he will be in India for 182 days or more. So if exact 182 days, then also resident. And 183 onwards, resident. 182 resident, 183 resident, onwards resident in India. Okay. So if I am in India for 182 days, I am resident. I have to pay the tax, whatever I earn in India. That we will discuss later, what is payable or not. First of all, let's identify, whether it is resident or not. Okay. So 182 days or more, then resident in India. Now, or means either one or two. So if first condition is not satisfied, first condition doesn't satisfied, then we have to check next condition, and that is he has been in India during 4 years immediately preceding the previous year. Now what is this immediately preceding the previous year? Immediately preceding the previous year means, let me share the Excel sheet. Now, if I am talking about previous year 2019-20, if I am talking about previous year 2019-20, then previous 4 years preceding to the previous year, it means previous year 2015-16, previous year 16-17, previous year 17-18, and previous year 18-19. So these 4 years. Preceding to the previous year. Preceding to the previous year. So these are the preceding 4 years. So now what is written over here? He has been in India during 4 immediately preceding the previous year. It means in these particular years, in this 4 year, for a total period of 365 days. For total period of 365 days or more. So total of these 4 years will be how much? How many 365 days? 365 days. And has been in India for at least 60 days in previous year. It means here 60 days. Okay. So preceding 4 years, 365 days in India, and in this year 60 days in India. In this year means in previous year. In previous year 60 days in India. So first condition, condition 1, 182 days or more in India in previous year. Only previous year. First condition is talking about only previous year. Second condition is talking about 365 days in preceding 4 years, preceding to the previous year, and in this previous year it is 60 days. Okay, you have to remember this. Okay, this is the base of your income tax. If you don't know this, No, nothing. Yes. Yes, definitely. I will give you examples also. Don't worry. 60 days or more. At least 60 days. Look. Sorry. In previous year. Current year. Here, nothing is current year. You have to talk in previous year and assessment year. Okay. Nothing like current year. Why? Because you will be confused in future. What is the meaning of current year? Current year જેવું કાંઈ હોય જ નહીં. Either previous year or assessment year. When we will calculate this, first of all, after completing the year, after completion of year, you will be able to know that okay, how many days you are there in India. So in assessment year, you will calculate this. In assessment year, where you will calculate this in assessment year. In assessment year 2021. Assessment year 2021, previous year you will be your 1920. Okay. In assessment year, after 31st March, you calculate na કે how many days I was in India. કે પહેલા જ ખબર પડી જાય કે ના આટલા તો હશે જ મને. It's not like that. So first condition, 182 days or more in India. If it is not satisfied, okay, I have calculated. Okay, now I am writing down here example. Okay, I have calculated. Let me give you the name. Mr. Ram has calculated that I was in India for 95 days only. Okay, I was in India for 95 days. Okay, now what to do? Now I have to calculate my 4 years. So I have calculated my 4 years. So in 15-16, I was in India for 100 days. In 16-17, I was in India for 100 days. Again, in 17-18, I was in India for 100 days. And in 18-19, I was in India for 100 days. So if you calculate, it is 400 days.
Yes.
So it is more than 365 days. And in this year, in this previous year, you were in India for more than 60 days. Okay, done. You are resident. You are now resident in India. Clear?
Yes.
Now, his friend, Mr. Shyam, he was in India for 95 days. Same. બે સાથે traveling કરે છે. He was in India for 95 days, but he was in India for 60 days only. In past 4 years. So if you calculate, this is 240 days only. Okay, so he is not resident. Directly you have to write down that Mr. Shyam is non-resident. Why? Because he doesn't satisfy any condition. Condition 1, that is 182 days or more in India, that is not satisfied. And condition number 2, that is 365 days in preceding 4 years, preceding to previous year, and 60 days or more in previous year. So if a condition satisfied not thati, that's why he will be considered as non-resident. And here Mr. Ram will be resident. Right now we don't know whether resident and ordinarily resident or resident but not ordinarily resident. But we at least know that he is resident. Okay, he is resident. So this is most important concept. Okay, I want reply from all the students whether it is clear or not.
Yes. Yes.
જો આ નહીં ખ્યાલ આવે તો કાંઈ નહીં ખ્યાલ આવે. Because you don't know whether the person is resident or not, then how will you calculate the tax? Chalo, I want reply from all of you. Okay, Ishan, first reply. Very good. Amruta, okay. Chalo, Dhimant, Srina, Nishtha, okay.
What's the difference between resident and ordinary resident?
That we will discuss later. Don't worry, everything will be covered. Krutik, okay? Devansh. મીરવ, હવે રાત રહી જશે. મયંક, આર યુ ધેર? મયંક, okay. 12:40 સુધી છે, 5 minutes. ચલો, next point. If individual satisfies any one conditions mentioned above, he will be resident. That's what we have discussed. If both of the above conditions are not satisfied, individual is non-resident. We have written over here, Mr. Syam, you are non-resident. Why? Because you are not satisfying any condition. Now, notes. This is also important. First one, the term stay in India includes stay in territorial waters of India. Territorial water means land area પૂરો થઈ જાય પછી territorial water area આવે, બધા country માટે આવે. That is 12 nautical miles. 12 nautical miles into sea from Indian coastline. You know coastline? After land area, your coastline will start. Means coastal area કહેવાય. After 12 up to 12 nautical miles, it will be considered as India. Okay, it will be considered as India. Even stay in ship or boat moored in territorial waters. Territorial water માં જ ફરે છે. Then also it will be sufficient to make an individual as resident. Okay. So many employees are there who are working in ships. Yes. So if it is within 12 nautical miles, then also he will be considered in India. Point number 2. It is not necessary that period of stay must be continuous or active. Nor it is essential that the stay should be in usual place of residence. ગમે ત્યાં ચાલે ઇન્ડિયામાં, any place in India. And it is not compulsory that it will be continuous. That 1st April આવ્યા તો it will be continuous 182 days or 60 days. It will be in brackets also. Like 60 days in India, then 60 days in Dubai, again 60 days in India, 60 days in Dubai, again 60 days in India. So if you count, it is 180 days in India. Okay. So it is not like that. We have to be continuously present in India. You will be in India or any part of the world, but total 182 days thava joy. Then and then only you will be resident. For the purpose of counting the number of days stay in India, both date of departure as well as date of arrival are considered to be in India. Date of departure in India, date of arrival will also be considered as in India. Okay. For example, yes.
182 days કેટલા પ્રોગ્રામમાં સમય પૂરો એટલે કેટલા ચાર્જિસ
Every year, મેં શું કીધું? It depends upon previous year. क्या વર્ષમાં છો તમે? Now, right now I am in previous year 21-22. So I have to keep 182 days in India. I have to keep that methodology that okay 182 days હું ઇન્ડિયામાં રહીશ તો જ હું રેસિડેન્ટ થઈશ, otherwise નહીં થાય. Now again, after 1 year, 21-22. Sorry, right now 21-22, 22-23. So I have to count 182 days. Okay, every year you have to count 182 days. Done? Now, last point. The residence of individual for income tax purpose has nothing to do with citizenship. Okay? It is not citizenship right. It is for the purpose of income tax only. Okay? You can't say that I am resident of Australia, so I am citizen of Australia. Okay? You are resident of India. You might be or might not be citizen of India. એનાથી તમે સિટીઝન નથી થઈ જતા ઇન્ડિયાના. Okay? For example, right now IPL will be held in Dubai, and from 19 September it will be in India for I think. So for example, let's say one foreign player came in India for the tournament, okay, and he was in India for 100 days every year. He was in India for 100 days every year and 95 days in India. He was in India for 195 days. So he will be resident but not citizen of India. Okay, he will be resident But citizenship doesn't depend upon the residential status. True or false may be asked. Place of birth or domicile. An individual can therefore be resident in more countries than even though he can have only one domicile. Domicile means citizenship. એક જ countryની citizenship હોય, but he will be resident in more than one countries for the purpose of taxation only. Chalo, clear or not? I want reply from all of you. Okay, Rohin Banu. Chalo, that's all for today. All of you are requested to write down the enrollment number. Thank you, all of you.